Hello, it's Jeffrey Christian of CPM Group. It's 2:40 on Monday morning, the 24th of June. I'm recording this for release on Tuesday because I'll be busy Tuesday morning. I want to talk about a brief update on gold and silver markets. On Friday's video, I think we were pretty much detailed and much more explicit. We talked about our expectations for gold and silver over the second half of this year. And we focused in part on the potential that the silver price could spike up briefly in the final week of June due to the July roll, the roll forward of the July Comex silver futures contract, that could lead to a brief spike in the prices of gold and silver this week, followed by prices coming back down toward the low end of their recent trading regions. Pretty well detailed on Friday. There's not a lot that's been happening since that time, so I think I'm going to try to be brief. The markets were pretty quiet, at least the gold and silver markets on Monday. So far today, the price of gold is trading around $2,340 as I speak. You can see on this chart that, relatively quiet market. The gold price has been trading basically between $2,300 and $2,400 since the middle of April, when the price had spiked up to about $2,460, came back down. It did spike over $2,400 in the middle of May. It came back down. It made a run at $2,400 in early June, didn't make it, came back down. We wouldn't be surprised to see another run at $2,400 and maybe even a little bit higher this week before the price comes off. There's not a lot of real news in the market. Investment demand continues to be relatively healthy for gold around the world. We're a little bit concerned, but not surprised, at some weakness in investment demand, primarily in Europe and the United States. These, I think, are investors who were relatively novice to the gold industry, not long-term investors. But they saw the gold pricing rising in March and April. March and April really is when the price rose. And they came into the market thinking that the price would continue to rise as sharply as it had. And, as the price has moved sideways over the last 2.5 months now, there is some disenchantment on the part of these short-term speculators, and we're seeing some selling off of positions by them. We think that's a temporary factor. It could factor into what we expect to be relatively quiet July and August, possibly testing that 2,300 and possibly breaking below it for a period of time. We still expect longer term, beyond July and August, for gold and silver prices to rise. There are a lot of longer term factors, which I'll get into. Just focusing on this week right now, you do have the presidential debate on Thursday. That could have an effect on financial market sentiments. I won't speculate one way or the other, but there are some clear there's the potential that it's meaningless to the markets, but there's also the potential that it could become worrisome to investors, and you could see some upward movement in the gold price on Friday in reaction to that. You also have some economic data that's pretty important coming out. On Thursday, you'll have GDP revised estimates. And you'll also have durable good orders. The durable good orders will be indicative of the potential for the overall economy to weaken in the ensuing months. On Friday, you have the personal consumption expenditures data and the PCE inflation estimates. And those will be very important in part because people focus on the PCE inflation figures because the Fed said that they pay attention to the PCE inflation figures, and so many people in the financial markets still think that monetary policy is the end-all and be-all, ignoring the fact that fiscal policy is really the whip that cracks the economy. one way or the other. So we do have some economic data, and we have some political, the potential for some political factors to affect the markets this week. Longer term, we do think that the prices could be quiet in July and August, test those lows, and then beyond that, we think that political and economic factors will once again sort of stimulate investment demand, and we'll see higher gold prices. Very similar pattern with silver. Silver's trading about $29.50 as I speak. It has come down below. It's been spending most of the last couple of weeks below $30. Our view is that it does have the potential to spike higher, possibly as high as 32 or 33 over the course of the next week. We're watching that July Comex futures roll. As of Friday, the open interest in the July contract was down to 305 million ounces. That's still pretty high. I mean, it's off from 733 on April 28th. So we've seen more than half of the July futures open interest rolled into September and October and December right now. And you have another 300 million ounces that will mostly over the next week, that could assert some upward pressures on prices on a short-term basis. Once the roll's behind the market, or even if it doesn't have an effect on the market, we would think that the silver price is going to come off a little bit. That's all I have for now. As I said, on Friday we were in much more greater detail, and we also talked about the roll of the July futures contract in greater detail. And we compared it to the effect of the roll of the May contract in 2011, which really was the factor that took silver prices from $36 an ounce at the beginning of April to its historic intraday price peak of 49 something in late April, only to see the price come back off to $32 in the first week of May, once the May contract had rolled into July. It's a very good precedent to show you how the rule can affect the price and cause it to rise sharply over a brief period of time as the roll occurs, and B, how the price can come off sharply once the roll is behind the market. It's very important to understand these mechanics and the minutiae of how these markets work. We'll be doing our open forum for clients on the 27th of June. That's Thursday. You can send in questions, or you could ask questions during the open forum on Thursday morning. And then we'll have our Platinum Group Metals yearbook briefing in the middle of July. Go to our website. You can read reports. You can buy reports. You can send an email to CPM Group at info@cpmgroup.com asking us to be in touch with you about how we can help you improve your performance of your precious metals and commodities financial exposure. That's all I have for now. Take care of yourself. Take care of those around you. Be good to the world. It needs us all to be good to it.